Now is the time to buy. Don't wait to buy real estate. Buy real estate, then wait, okay? In 2023, GDP growth will expected to end at 1.7%. In 2024, GDP growth will end at 0.8 of a point. So we are going down. Is that a recession? What's the definition of a recession? 2 consecutive quarters of what? Negative GDP growth. So predictions now are that's not going to happen in 23 or 24. So consumer confidence should be improving. Inflation is now at 3.6% from about 8% this time last year. So it's come down by half. They had to raise interest rates. Rates right now, bank rate is 5.1%. So right now, banks are having to pay 5.1% to the feds to borrow money, which means mortgage loans are right now sitting at 7 to 8.5%. Car loans are sitting between 7.5 and 11% interest, which is interesting because new car sales will hit 15.5 million this year, an almost 20% increase from 2019. Why are car sales going up when interest rates are so high? Because people need a new car. Guys, it doesn't matter what interest rates are. People are always going to need a place to live. They're always going to need a vehicle for transportation. So just understand that what's going on with rates. Unemployment at the end of 23 will be at 4%, up from 3.6 now. The feds are predicted to raise rates 2 more times this year. So be aware of that. 7.1 or 7.5 now. By the end of the year, that could be sitting around 7.5, 8. So they are anticipating 2 more increases to the interest rates because the job numbers are still too strong. So too many people are employed. So we need to pull that back a little bit, raise rates. So, more real estate brokerages have to close and people have to go find a real job because they can't make it as a realtor anymore or a mortgage broker. So as they see jobless rates going up is when they'll start pumping the brakes on raising rates. But for the foreseeable rest of the year, rates will go up 2 more times. So be aware of that. If you're on the phone with clients, now is the time to buy. Don't wait to buy real estate. Buy real estate, then wait, okay? So guys, get our clients motivated. Get them on the phone. Get them out there writing offers, doing deals, submitting loan opportunities. It's always a good time to be in real estate. The U.S. banks appear healthy to weather a potential real estate crash. Regulators are working on new rules requiring big banks, those with assets over $250 billion, to hold more capital against losses. This year's test covered 23 big banks. The Fed says those banks could withstand a 40% fall in commercial real estate prices and aggregate losses of more than $500 billion without failing. The banks could also survive unemployment surging to 10% and the stock market plunging 45%. That's like absolute carnage. If all of those things occurred, that would be bad. And so what the feds have done is they said, banks, you need to have this much cash to weather these storms. So what does all this mean? It means consumer confidence. So the consumer confidence index is going to remain strong because the banking sector is in good condition. Even though we saw some failures earlier this year, banks are strong. And so with that, we're going to see increased consumer confidence. With that, we should see people getting increases or lines of credit on their credit cards, which increases their spending power. So we should have a really strong rest of the year as an organization. So just be aware that money is freely flowing, even though the cost of it is higher. It's freely flowing and consumer confidence is high. So with that, we should see our clients out there buying and investing and borrowing.